All right, let's go back to that Eskom briefing where they're currently sharing their latest performance, and that briefing currently being chaired by outgoing CEO Andre de Ruyter.
Unable to make as much progress as we would have liked to. We had targeted operationalization of the transmission business by April 2023. This, unfortunately, now needs to be moved out because we have faced significant delays in external decisions, including the appointment of a board for the National Transmission Company South Africa, certain licenses and approvals, and these have made it impossible for us to achieve the desired for implementation date of legal separation. Just again to emphasize, legal separation is a key enabler of increased investment in generation and is therefore a critical enabler to resolving the generation capacity shortfall that will help us to end load shedding sustainably. So delays faced in this process really are of great concern to us. The outlook for the end of the current financial year, 22-23, can all participants please mute? Please mute all participants. Thank you. The forecast net loss after tax is anticipated to be 20.1 billion, and this is due to a decline in sales volumes, higher maintenance spend, as well as higher spend on open cycle gas turbines and fuel oil due to continued low energy availability factor and poor performance from our generation division. Next slide, please. So talking about the generation plant performance, we have seen significantly higher planned maintenance. Of course, the more planned maintenance we do, the lower the EAF. The way that EAF is calculated, we deduct planned maintenance from the energy availability factor. However, as management, we have been firm in continuing to carry out planned maintenance. We believe that this is the only way to sustainably restore some semblance of reliability to our coal fleet, and we are continuing to allocate capital, resources and time to this very important initiative. The continued use of our gas turbines and the associated consumption of diesel is a cause of concern at just under 15 billion rands worth of diesel. Again, this is not a sustainable way to generate electricity, particularly because the allowance made by NERSA for diesel consumed by our peaking plants is significantly below this number, which means that the balance has to be funded through internal savings. We unfortunately again have to report as part of the year under review the hydrogen explosion that took place at Medupi Unit 4 on the 8th of August of 2021. That unit is being repaired and is anticipated to return to service by August of next year. We are engaged with the OEM of this unit, General Electric, and they have been most helpful in trying to expedite the resolution of this particular repair project, and we are looking at all options in order to expedite the return to service of Medupi Unit 4. We were able to reduce our coal inventories. Now, we have remained within our grid code, so this is not a source for concern, but it does point to improved inventory management, and it shows that we are trying to unlock as much cash as we can from internal resources. Similar exercises have also taken place in our transmission and distribution businesses, where we have released cash from inventories. A similar exercise is taking place in our generation business, where unfortunately we are confounded by a lack of poor inventory control and significant resistance to the implementation of inventory control measures, including barcoding. As I've said, our network and new build business continue to do well. Transmission and distribution. Medupi 1 achieved commercial operation, and the way, of course, that we brought these units online was that Medupi 1 was the last unit, and Unit 4 was synchronized to the grid exactly a year ago today, and that unit today is running very well, consistently at about 720 megawatts. The boiler modifications were completed at all 6 Medupi units, also on Kusile units 1 to 4. Kusile unit 5 was delayed by a year due to a gas air heater fire earlier this year. We anticipate that we should be able to return that unit to being synchronized to the grid by August or September of next year. And of course, this further exacerbates the generation capacity shortfall that we anticipate for calendar 2023. We are continuing to improve the strength of our grid by installing batteries. And then lastly, we are complying with the World Bank loan conditions for the Medupi FGD, and that work is continuing. As far as the graph in the middle is concerned, I do wish to point out the fact that the brown bars are an indication of how hard we are running our coal plant. This is the energy utilization factor. And as you can see, the energy availability factor is going down. So think of the energy availability factor as the speedometer on your car, and the energy utilization factor as the rev counter on the car. And as the speed drops, we are pushing the rev counter more and more into the red. And this clearly points to the urgent need, as we have been saying consistently for the past 3 years, to add between 4 to 6 gigawatts of new capacity to the grid on an expedited and urgent basis. Next slide. From an environmental perspective, we did see improved compliance, particularly with regard to particulate emissions. However, Duva, Kendal, Letaba, Matimba, Matla, and Tutuka continued to perform quite poorly due to unacceptably low coal quality, and also as a consequence of the coal quality, in particular dust handling plants that did not do their job of preventing, limiting as much as the reductions in emissions as we would have liked. We are continuing to engage with Minister Creasy at DFFE to ensure that there's a transparent process to consider Eskom's appeal in terms of complying with the minimum emission standards. As you may be aware, if we have to comply, as we were supposed to from April of this year, which of course was suspended by our appeal, we would have to retire immediately about 16 gigawatts of generation capacity, and that would have created a very large shortfall in generation capacity. Our water consumption remains very high. Coal generation is a very thirsty technology. Just to again point out that if we implement our 2035 strategy, we will be able to release, through the shutting down of 22 gigawatts of coal-fired capacity, sufficient water, some 40 billion litres of water a year, to provide 220 litres of water per day to 200 million people, 3 times the current population of South Africa. So in order to head off the predicted mega droughts that are in the offing due to highly likely forecasts on the basis of climate change, the reduction in our water intensity and bringing about a step change in that regard is going to be very important indeed. It pains us to report that we recorded 4 employee and 2 contractor fatalities. We express our condolences to the next of kin of those who passed during the course of service to Eskom, and we have consistently, as a management team, re-emphasized our efforts and redoubled our attempts to instill a safety culture. Consequently, we saw that our lost time injury rate came in at 0.24, which is still a very, very good number. But obviously, as long as there's a single fatality, it means that we have not achieved our safety objective, and we therefore are very regretful that these tragic incidents have occurred. We have improved our racial and gender equity, reports to the contrary notwithstanding, and we have consistently managed to drive both racial and gender equity at particularly professional and middle management level, where we are now sitting at just under 82%. So the common narrative perpetrated by some people who have a fairly loose relationship with the truth, unfortunately, is disproved by the numbers. Similarly, the narrative that Eskom management does not pursue preferential procurement, again, is disproved by the fact that we were able to record a 10% improvement in our preferential procurement spend as against the prior year. Again, the narrative that is out there that somehow Eskom is not in favor of doing business with small and emerging, particularly black-owned businesses, clearly comprehensively rebutted by the numbers. So I would urge members of the media to also look at the numbers rather than to lend their ears to those who have lost out on contracts due to the fact that they have engaged in illegal or unethical behavior. Next slide, please. Governance remains a huge focus area for us, and we really have to, as a nation, confront this scourge that is going to result in our country becoming, in my respectful opinion, ungovernable if we do not tackle fraud, corruption, sabotage, and other criminal conduct. A number of our power stations are in the grips of criminal syndicates. We welcome the recent steps by the Hawks. We also welcome the deployment of the South African National Defence Force to secure the assets. My only regret is that it's taken so long for our security forces and agencies to start engaging with a matter of national security, and it's a grave pity that we had to get to a position where Eskom itself, with privately funded intelligence gathering, had to assist our law enforcement agencies to investigate with a view to bringing some of these perpetrators to book. But let's hope that we've seen the turning point and that we can now arrest this tide of sabotage, corruption, and crime, particularly with regard to our generation business. We are trying to continue our campaign to bolster integrity, ethics, compliance, and governance. And we have implemented a crime risk management unit with the support of a law firm, where we will continue to do a full assessment on crime risk management within Eskom, particularly combating bribery and corruption, financial crimes, physical asset crimes, cybercrime, and money laundering crimes. And we will then be able to implement a crime risk management program to be embedded as part of Eskom's standard operating procedure. So while crime remains such a significant part of our landscape, we will have to play the role of policeman because of failures in our law enforcement to bring these perpetrators to book and to particularly conduct appropriate intelligence operations to prevent crime from happening in the first instance. We are also establishing a single investigative unit to ensure that we can achieve maximum synergies between our forensic and our security teams. And this is going to be, we think, a very important structural remedy to improving our own internal investigative capability. Next slide, please. We've also benchmarked with both local and international benchmarks, including local banks, the World Bank, and so forth, to establish a business integrity function. And we anticipate that we will be able to then remove many of the matters that relate to violations of Eskom's ethics code, as well as crimes of integrity from line management, where there's often significant conflicts of interest, as well as a reluctance by line management due to intimidation to take action against the people who are alleged to have participated in these actions. And we think that with this single integrity function, we will be able to expedite some of the long-standing disciplinary matters on matters of integrity and bring these perpetrators to book in a way that ensures accountability, but also ensures that employees who find themselves accused of these violations of our ethics codes are treated fairly, but expeditiously, so that we can exit them from the system, that they are not the recipients of full benefits while on pay for these alleged violations. We're improving our procurement systems so that we can pick up where orders are split, where we pay significantly above the market. We are going to continue to digitize our stock control using barcoding again. Very significant internal resistance to making these changes for reasons that we can all speculate about. And we will continue to use e-auctions. But also, very importantly, we have implemented a Know Your Supplier campaign. In every corrupt relationship, there is a corruptor and a corruptee. And while many Eskom people, unfortunately, over the years have succumbed to the temptation of corruption, we also have to point a very stern finger at business, as these are the people who, in some instances, regrettably, and I'm by no means accusing all of our suppliers, but we are aware, due to recent court cases, for example, ABB, that there are businesses who have engaged in criminal acts of corruption. We will therefore be implementing this Know Your Supplier campaign to prompt business partners to do due diligence exercises, to do audits, proactively screen directors, to ensure that where we deal with men or women of straw, that we identify them up front, that we identify non-value adding intermediaries, and that we do not do business with those people because very often they are just a front, and that they actually have nothing to do with empowerment, but they have everything to do with disguising the true intent of doing business and inflating prices at the expense, ultimately, of the electricity consumer in South Africa. So this is quite an important campaign, very similar to the well-known Know Your Client campaign run by the banks, and we feel that this is a very necessary intervention in order to ensure that our supplier base is also held to account. Next slide. I'm now going to hand over to our Chief Financial Officer, Caleb Kassem, who will take you through the audit as well as the finances before he hands back to me for a final summary right at the end. Thank you, Caleb.
Thank you, Andre. Good afternoon to everyone on the call. In terms of the audit findings for FY 2022, firstly, from a PFMA perspective, there is a qualification around irregular expenditure in terms of completeness as well as accuracy. This qualification we have added now for the last few years, and that continues in terms of addressing the issue of irregular expenditure. Further to that, it also qualifies on fruitless and wasteful expenditure, as well as losses due to criminal conduct, all linked to completeness and accuracy in terms of the PFMA and those requirements. As you will be aware, in terms of Eskom's financial situation, the material uncertainty around going concern, we are only able to continue as a going concern on the basis of the support that we've received to date from government and the continuous support that is earmarked going forward. And you will all be aware in the minister's speech the intention of a significant amount between a third and 2/3 of our debt on the balance sheet that will be announced in the upcoming budget of February 2023. Further, in terms of the audit report and emphasis of matter relating to the restatement of prior year numbers, and I will touch on that shortly, as well as events after reporting date. And in addressing the report of the Zondo Commission, we have introduced a new accounting policy to deal with investigations and possible corruption. And as and when those transactions are concluded, we will then account for it in our financials. With regard to the prior year restatements, we've announced this in previous communication in terms of SENS announcements, substantially linking to a new valuation curve methodology in terms of our hedging instruments, and then that net fair value losses that's being addressed through your other comprehensive income. As indicated in the graphic below, that restatement for FY21 in terms of fair value foreign exchange loss or gain was 8.9 billion loss to the income statement. Other big restatement items revolve around the reclassification of coal inventory from current to non-current, substantially linked to coal that won't be utilized in the forthcoming 12 months. So we have now reclassified that. These changes then impact, as you will see, from 2021. Previously, you had under inventory current of 37 billion. That is now split substantially between current of 22.5 billion and non-current of 11 billion. What does this mean in terms of your financial key ratios? The current ratio is then adjusted from previously reported 1.27 to 0.95. If I touch on the PFMA and the irregular expenditure, you will see that for FY22, we started with a closing balance of 37.2 billion in 2021. Restatements as we continue addressing the historic irregular expenditure, 22 billion rand restatements, but of that 22 billion rand, there are two transactions that contribute about 19 billion of the 22 billion. One relates to a Black and Veatch transaction that goes back as far as 2006, totaling 11.7 billion. And the other one relates to fuel oil emergency procurement due to reclassification of 7.5 billion rand. What you will see as well, as contracts are irregular and continue to be incurred during the year, those historic transactions add 8.1 to irregular expenditure in FY22. New incidents and transactions that were recorded during the financial year was 300 million. I must highlight that there are a number of transactions that have been incurred in 2022 financial year that is still being assessed, and based on our historic trends, some of that will then flow through in our next reporting cycle, leaving you with a closing balance of 67.1 billion in terms of irregular expenditure. We have established a loss control department in April 2021, and in order to reduce this amount of irregular expenditures, first and foremost, in your existing current year, you don't want to be incurring any more irregular expenditure. Then you need to deal with condemnations in terms of the historic items or remove them after taking the necessary investigations and ensuring there were no fraudulent transactions. If we move on to the next slide, touching on our financial performance for the year, Andre has highlighted substantially a lot of this without repeating. Based on your growth in your EBITDA margin from 15.9% in 2021 to 21.2% on the back of a 15.6 tariff increase and growth in volumes as we came out of the COVID pandemic, your EBITDA grew by 20 billion year on year, from 32 billion to 52 billion. And that reflects in the improved operating profit, which grows literally 3 times from 6 billion to 20 billion year on year. And like Andre has indicated, taking into account finance charges as well as depreciation leaves Eskom year on year with the loss dropping from the restated amount of 25 billion to 12 billion. On the back of that, you can see all upward trending improvements in the key financial ratios. Just to highlight importance, the debt service cover ratio, despite increasing from 0.3 to 0.76, it's below 1, which means that Eskom's cash from operations is insufficient to cover our interest commitments and our capital commitments on our debt. And that is why we need the support in terms of government equity conditions to ensure Eskom can meet its debt service commitments. With the support of the equity that we have seen come through in this last financial year of 31.7 billion, that has contributed, together with the increased earnings, to an improvement in terms of your debt equity ratio from 2 to 1.8. And then similarly, you can see that improvement on gearing sitting at 65%. We move on to the next slide. The income statement, just to talk on primary energy, the key increase in primary energy of 15% is on the back of the performance of generation, resulting in much more expensive sources of supply being utilized in the form of our open cycle gas turbines, our diesel production. That comes at a much more higher cost, and that has resulted in an increase in primary energy year on year from 116 billion to 132 billion. You will see that from a net employee benefits expenditure, that has remained relatively flat year on year, and our other expenses have grown by 19% from 24 billion to just under 29 billion rand, substantially attributable to the growth in maintenance costs of 1.7 billion, as well as the write-off that related to Medupi Unit 4 damage. We have also taken into account Eskom's the decision from SARS to not allow for the recovery of our diesel rebates of 3.6 billion rand. So that has been adjusted in FY22's financials, and the Medupi write-off was 1.1 billion, together with 2.7 billion of provisions that were raised for compensation events attributable to the Koeberg power station. Ultimately, this culminates into that bottom line loss of 12.3 billion, down from 25 billion rand. We move on to the next slide. From a sales perspective, substantially in most categories, that has increased year on year, as I highlighted, coming off the back of the pandemic, with just a slight marginal decrease in international sales. The point I want to highlight here, to our 12.3 billion rand loss, as I mentioned on the previous slide, had we been able to collect our municipal arrear debt in terms of IFRS 15, based on our inability to collect and recognize that revenue, we have not recorded in the income statement 7.7 billion rand worth of revenue. So that would have reduced your bottom line loss by that amount. We move on to the next slide. And just unpacking our primary energy analysis in terms of the unit costs year on year, you will see that your coal and your other costs have grown by 5% year on year. Nuclear has come down by 5%. And then on the back of oil prices, we have seen that your OCGT costs, rand per megawatt hour, has gone up by 19% year on year. That's for Eskom's diesel costs, and the ones attributable to the IPP OCGTs reflects a 28% increase. Overall, from a renewable portfolio perspective, there's been a 7% drop in terms of the rand per megawatt rate, and imports have gone up by 10%. So from an overall portfolio, 11% increase in our unit cost of production, up from 516 rand per megawatt hour to 575 rand per megawatt hour. If we move on to the next slide. Just from an investment in infrastructure, you can see that repairs and maintenance have increased for the year, up to 19.1 billion from 17.4 billion rand in the previous year. And across our value chain of generation, transmission, and distribution, there have been increases in maintenance year on year. And that remains the focus for Eskom going forward. From a capital expenditure as well, you can see that we have spent in that financial year around just 30.2 billion, up from just under 24 billion in 2021. And even in this financial year, that capital expenditure will increase based on our affordability as Eskom. Move on to the next slide. From a financial position perspective, overall, I think the key items here is that our debt on the balance sheet has dropped by just about 5 billion rand year on year, from 402 billion rand to 396 billion rand. Importantly, we have seen an increase in our liquid assets, cash and cash equivalents, from 18 billion to 33 billion, with your pure cash position at the end of the year in March 22 being 15.9 billion, an increase from the previous year's 4 billion rand. What is also important that in terms of the balance sheet, we've seen the 31.7 billion government support come through in the financial year, and importantly that to date, over the last 4 years, government has always delivered in terms of that equity support, which gives us confidence as Eskom to remain a going concern. In terms of the key ratios, as I mentioned before, your debt to equity ratio improving, and your current ratio, because of also the reclassification, that has decreased year on year. And then you can see on the back of your exchange rate changes between 2021 and 2022. We go on to the next slide. Just looking at our debt and our finance costs, I've spoken about the gross debt, and from a net debt perspective, a drop from 400 billion rand to 389 billion rand, and I've mentioned our cash position. You will see that during the course of FY22, we have repaid just under 39 billion and we raised 33 billion rand. Exchange rate movements of 3.6 billion and some other items of 4 billion rand. Important to note that in terms of our foreign denominated borrowings, that comprises about 40% of our portfolio. Our average cost of debt at around 10%, and our investment returns at just under 4%, 3.92%. And importantly, as Andre has indicated, the gross finance costs on the back of a 400 billion rand debt of 43 billion rand, taking into account finance income and borrowing costs that are capitalized, leaves you with a net 33 billion rand. And that's a key element to address in terms of Eskom's financial sustainability going forward. Moving on. Just funding for the year, a significant borrowing requirement for FY23 of 58 billion rand. To date, we've secured 40.7 billion, 70% of that. We are confident that we will achieve our funding to the end of the year. Importantly to note that a large portion of Eskom's funding is secured on the back of government guarantees. What is available to Eskom as at the end of November 2022 is 28 billion of guarantees. And in terms of our debt maturity going forward, you can see it's quite front-loaded from an Eskom perspective. 81 billion rand that needs to be repaid in this financial year. And if you just look at the trend over the next few years, averages 60 billion rand of interest as well as capital repayments on our debt portfolio. If we move on. Cash flow basically highlights that once you've taken the revenue and your operating cash flows into account, the operating surplus of 53 billion must then service your interest repayments, your debt repayments, and your capital expenditure, ultimately leaving us with debt service commitments of the last financial year of 72 billion rand, resulting in a debt service cap of 20 billion, linked to then the equity support of the 31.7 billion, resulted then in a net cash increase for Eskom's cash flow of 11.8 billion rand. Just highlighting the importance that without the government support, Eskom will not be able to meet all its debt service commitments. If we move on to the next slide. Arrear debts, Andre has touched on it. At year end, we were sitting at a balance of 44.8 billion, a growth of 9.5 billion. But like Andre's mentioned, currently for this financial year, we're already up to 56 billion rand. This needs to be addressed through interventions of government. It's unsustainable. Eskom cannot be carrying a growth in arrear debts from municipalities of around 10 billion per annum. And I will highlight that in an upcoming slide. Over and above our municipal debt, Soweto has decreased to 4.6 billion rand after we have written off some prescribed debt as well as in duplum interest. Just to touch on other customers, customers that owe Eskom in excess of 100 million. We have Transnet of 437 million, and in electricity, the Mozambique of 579 million, of which 350 million is in dispute. If we move on to the next slide. Just reflecting segment information in terms of our three key businesses of generation, transmission, and distribution. From an EBITDA perspective, generation posted a 26 billion EBITDA, with transmission of 9 billion and distribution 13 billion rand. And then once you take into account depreciation and finance costs, you see that the loss or profit before tax for each of these segments is generation, reflecting a loss of just under 29 billion, transmission coming in at a 1.6 billion profit, and distribution at 8 billion profit. Importantly, from an asset perspective, one can appreciate majority of the assets would reside in generation of 544 billion, just under 80 billion in transmission, and 120 billion in distribution. Importantly, you will see that the 400 billion worth of debt is held at Eskom Holdings, and that is why it's not reflected or allocated across the different businesses of generation, transmission, and distribution. If we move on to the next slide. So if we take an outlook, and this is based on our September projections to year end, on the back of the declining energy availability factor and the pressure being placed on your open cycle gas turbines, as well as fuel oil utilization, we do see as Eskom that your primary energy, especially diesel spend, will grow to about 10 billion at the end of the financial year, and fuel oil of just under 9 billion rand. On the back of this year's tariff adjustment of 9.6%, what results is then a declining EBITDA margin from 21.25 to 16%, and then that flows through in terms of your operating profit dropping from 20 billion to 11 billion, and then your loss, as Andre has indicated, of 20 billion rand. I think importantly to highlight that there is, based on the MTPPS, further commitment in terms of government support for up until 2026, with 21.9 billion rand that will be allocated to FY 2023's financial year. Importantly, in terms of the upcoming decision the regulator will have to make on the 12th of January, following the court decision, is the allocation of the 59 billion rand that was linked to the previous incorrect deduction by the regulator. And then secondly, the correction of the regulatory asset base that also has to be adjusted and complied with that court order in the upcoming decision for the next 2 financial years. So next slide, please. So if I look at it from where Eskom is sitting, unpacking all of this in terms of our financial performance and liquidity, I think 2 important items are critical for Eskom going forward. As I reflected, this 20 billion rand loss for up until forecasted for March 23, but importantly, we know that NERSA is going to make their determination that would relate to FY24 and 25. Now, what this slide highlights is that firstly, around the open cycle gas turbine cost that's allowed by NERSA and what Eskom actually spends during the year on the back of, and we acknowledge the low EAF performance, just looking at your actual gap and shortfall for March 21.
All right, you've been watching Eskom's delayed financial results. They were due to be released in September this year, and they've seen 2 postponements since then, and today them taking the media through those numbers, some interesting numbers there that have been shared by the Eskom team.